It's Brian Preston, the money guy.
You know how it is. We find these articles, and I love Consumer Reports. We haven't done this in a while. But Consumer Reports had a great article that was actually published in one of their magazines, the 10 Tips for Home Buying and Selling. And it was a good article, and it was written by Toby Stanger. How would you say that? Stanger? Did I say that right?
Yeah, it's like stranger without the R.
So Toby did a great job with this, but we're going to love on this even more so like the Money Guy, like we do on the Money Guy show. So let's kind of jump right into this thing, and we'll provide a link if you want to go out to moneyguy.com and check it out. So the first thing is talking about buyers. The first thing that he had put on here as a tip was establish a price range.
I think that's great. And that's a Money Guy echo. We say that all the time. Whenever you make a housing decision, there are some rules of thumb that you ought to live by.
Yeah, our echo was you don't want to spend too much. It kind of piggybacks on top of that discussion about it being a use asset. I like that. I like an understanding that you only want 25% of your income going towards housing.
That's right.
If you will keep that in check, life just seems easier. So 25% is kind of what I share with people. And when I say 25%, I'm talking about everything. Principal, interest, taxes, insurance. Make sure that you're being conservative with your home purchase.
It's perfect.
Also, before I moved on to the next one they had on the Consumer Reports, I thought because I didn't find any place to put this, but I think it's an important thing. When you buy any house, do the inspection. No matter how good it looks, do an inspection. It's only a few $100 to get an inspector to come in, and I think it's worthwhile. So do that.
That's one I struggled with because I didn't want to spend a couple $100 on something I thought was already great. But when you think about the gravity of what you're buying, this 100,000 plus or multiple 100,000, or in some cases $1 million deal that you're purchasing, a couple $100 isn't that crazy to kind of have some insurance.
And it's not uncommon for a seller to have an inspection report that they provided and paid for. Even though I'm sure there's great people out there that are providing these as a value add to the prospective buyers to show they were proactive, I'd still go out and get my own home inspection just for independence sake. Number 2, clean up your credit. Man.
So what you're saying is don't go finance a bunch of furniture before you close.
If only I'd read this article before I bought that first house, because we hear this stuff all the time. Yeah. Another thing that people will do is they will get serious about, because they'll read an article like this about cleaning up your credit. And they'll say, well, I need to go close down a bunch of credit cards and stuff. And they'll start taking all these actions to try to boost up their credit score. But be careful when you do these things. Right. We've done whole episodes and Money Guy shows on the fact that sometimes when you close credit cards, especially if it's the oldest credit card you have, that can hurt your credit score.
Sure.
So be careful when you go through the cleanup credit process. Do your research, and also just treat your credit with kid gloves while you're in this process of buying a new home.
If I am going to buy a house and I'm thinking about getting a mortgage, what's a good time frame to think about? I probably don't need to take out an auto loan or go open up a new credit card. Is it 6 months? Is it a year? Is there some guidance there?
You guys, you can see this stuff if you play on any of the credit apps like Credit Karma or go pull your own credit report. When they give guidance, they'll ask how many inquiries you've had in the last 2 years or so. And if you've had more than 2, that's a negative. Sure. It takes you from A down to B to C, depending upon. So that's what I would keep that mindset of there's a rolling 2-year period with your credit. You be careful when you're buying a house in the next 2 years. Probably need to save up all those credit inquiries for buying the house. Don't buy the car, the furniture, and the house all in the same 6-month period. It's going to look like you've decided, you woke up and you said, I need some credit today. And then it's going to scare the lenders. Because remember, lenders don't really like lending you money unless you don't need the money.
Yeah.
So if you look like you're gotten crazy and you woke up and you're going to do one of those leaving Las Vegas things like Nicolas Cage did where you're just blowing it out one last time. Right. They kind of spot that behavior. You need to be very careful with doing that. So that's cleaning up your credit. Number 4, get pre-approved. This is one I kind of had a mixed feeling because it ties into what we were just talking about.
Sure.
If you're going to let somebody, because it's easy to call a lender, give them your income, talk to them about what your monthly cash flow is on debts and things that you have like car payments or any other student loan debt. And they can tell you what you could be conditionally approved for.
Right.
But if you want to get pre-qualified, that means they got to run your credit.
Sure.
the article tells you to go get pre-qualified. And I agree with that, but I would say make sure that you know that this is the lender you're going to use, because you don't want to be jumping around a bunch, pulling a bunch of credit reports. Now, fortunately, the credit reporting agencies will do some grouping when you're on one transaction, but just be careful. You don't want to be throwing out your social security number to every lender out there.
And the other thing I would think about is you should go into this process prepared. Don't let the lender or the banker or the person you're talking with dictate the price and the size of the home that you're going to buy. Just because you're pre-approved for X $100,000 doesn't mean that that should be your price range. You need to go back to the rule of thumb, calculate 25% of your gross income, do some time value of money calculation, or figure out how much house actually makes sense for you, not just how much you can go leverage and go out to the hilt on.
Well, and that ties into it, because you're, especially, now maybe it's your second or third home, you don't have the same issues, but I know, well, I don't know, my second home down payment is a big concern. Mm-hmm. And a lot of people will they'll maximize, they'll say, okay, I've got this much in cash reserves, and they'll just gross it up, assuming that they could take all that and use that as the 20% down payment. What they usually don't think about is that whole 2 to 5% of closing costs and other fees, recording stamp fees, and all these other things. So don't underestimate the cost that go into buying a house. I think a lot of people just overlook that stuff. It's not so simple as you look at the house, you multiply it by 20% and go, I can afford it.
Yeah, that's not.
No, you got taxes, you got insurance, plus you got all the closing costs to get into it. So be very careful and aware of what's going on with all the fees and so forth.
That's right.
Sweeten the deal. What they mean by this topic of sweeten the deal is that when you're buying a house, if it's a hot market, it's not uncommon. We saw it with Carter, who's one of our associates here. Him and his wife wrote a heartwarming letter that they attached with the offer.
With a picture of them and their dog.
Exactly. I mean, it's brilliant. I mean, because that happens in hot markets where it's not uncommon for a house to have 3 or 4 offers. Moving to Nashville, I will tell you guys, is very unique. Here, they do showcase periods, meaning that they will put it on the MLS system for like 15 to 30 days before you can even go inside and look at it and make an offer. They basically tell everybody, hey, come one, come all, look at the pictures on the internet. And when this thing goes live on this date, come with your offers. And they come.
Yeah.
So what this is saying is about sweetening the deal is that cash down payments, the more you can put down, if it's a cash purchase or if you come down with a big cash down payment, you'll get the attention if you've got a competitive bidding process. Also, if you have flexibility, maybe you don't need to move in this house. You can offer the seller a little extra time if they're building another house somewhere else. Or maybe you can take it really quick in case the seller is trying to get out of this thing. Find out what the situation is. Ask your real estate agent to kind of do some detective work to figure out what's going on. Why are they moving? And you can help sweeten that deal because flexibility can be your friend on getting it. And then the last tip they had on here was shop for mortgages. And I thought this was pretty good. It goes back to our 25% rule. But I wanted to go a little further with it and say that, one of the things I think about looking at a mortgage is how long will you be in this mortgage? Mm-hmm. If you are like this military couple that offered on my first house, they knew they weren't going to be there for 3 to 4 years because that's how long the assignment was going to be, and then they would get moved out to some other place. Might make sense to do an adjustable rate. Yeah. That shakes me to the core to hear me say that because I'm more of a fixed 15 or 30 year mortgage. But be realistic with how long you will live in this house. Now, if you're going to live if you think like they're going to do with me, they're going to dig a hole in the back and throw me out there, and then my wife's going to go find her another man. 30-year mortgage is probably going to be the perfect thing. So understand what your needs are when you're shopping for a mortgage.
And understand the difference in the mortgage marketplace. If the last house that you bought was 15 years ago, things have changed a little bit. Interest rate differentials are different. The types of products that are available are different. So you need to educate yourself. Don't just assume that what you did 2 decades ago still applies to you making a change right now.
I thought it was unusual. When I bought my most recent house, this is not an endorsement. I'm just telling you my experience, sharing the story for educational purposes. I used Capital One. Yeah. When I thought of Capital One, when I thought of the process, I was like, it's the credit card company,
right.
but they do mortgages. And what I found interesting is that they actually showed their rates on the website.
Yeah.
I mean, that's pretty transparent.
Yeah, absolutely.
Even if you're not going to use one of these internet companies, these internet banks, use them to keep your mortgage lender honest. I mean, it's great when they're publishing those rates every day. And you don't have to play these reindeer games where when your mortgage lender tells you the rate, you're like, wait a minute, why aren't you close to this rate? It at least gives you some competitiveness to shop things around.